Welcome back to the Pro Ticker Podcast, your Tuesday morning edition, covering major financial magazine headlines, everyone.
It is good to be here, and honestly, I don't think I've seen a morning stack of headlines quite like this in a long time. Maybe ever.
I was actually looking at the calendar just to double check. It is Tuesday, February 3rd, 2026. But if you just glanced at the topics we're covering today, you might think we fast-forwarded about 50 years.
Oh, absolutely. We've got high-concept science fiction colliding head-on with some, 4D geopolitical chess.
It's definitely one of those days where the market isn't just reacting to quarterly earnings or, inflation prints.
No, it's reacting to these fundamental shifts in how the world is organized. The tectonic plates of the economy are moving.
Precisely. So for everyone tuning in, here is the roadmap. We have three massive stories on the Deep Dive stack today. First up, the headline that pretty much broke the internet yesterday. Elon Musk is officially merging SpaceX and xAI.
The big one. We're talking about a deal that creates a combined valuation of, what, $1.25 trillion?
$1.25 trillion. And a deal that involves, and I am quoting from the press release here, sentient sons.
Right. Which is a phrase I never thought I'd be analyzing in a financial context, but, here we are.
I are definitely going to unpack the sentient son comment and what it actually means. Then we're pivoting to a massive geopolitical reset. The U.S. and India have announced a new trade framework.
But, and this is where it gets really interesting, sources suggesting President Trump and Prime Minister Modi might be reading from completely different scripts.
Especially when it comes to the very sticky subject of Russian oil.
That is the classic devil in the detail scenario, right? What isn't being said is often louder than what is.
And finally, we'll hit the market whiplash. Gold and silver are acting like meme stocks. Literally, diamond hands are trending again.
I saw that. Unbelievable.
All while Palantir comes out and proves that AI is actually making money right now, not just in some hypothetical future.
It is a packed show.
It is. And our mission today is simple. We're going to look at the fine print in sources from CNBC, Reuters, and Bloomberg to figure out what is actually happening beneath all this hype. So let's jump right into the deep end, the Musk consolidation.
This is the big one for sure.
According to reports from Reuters and CNBC, SpaceX has officially acquired xAI. The numbers here are they're staggering. The deal values SpaceX at a cool $1 trillion.
$1 trillion. And xAI at $250 billion.
Just to pause on that for a second to put that in historical context, as Reuters pointed out, this breaks the record for the world's largest M&A deal.
Yeah, the previous record holder was Vodafone buying Mannesmann, and that was, 25 years ago?
25 years ago. So this is history in the making.
Yeah.
We are talking about the consolidation of the biggest space infrastructure company with one of the most aggressive AI labs.
It's a staggering amount of value concentration.
And for the investors out there wondering how the math actually works, because these are private markets,
Yeah.
the structure is pretty specific. If you are holding xAI stock, you're now receiving 0.1433 shares of SpaceX for every share of xAI you owned.
Right, or cash, I guess, if you're an executive who wants out at around $75 a share. But what fascinates me here isn't just the accounting.
No.
It's the narrative versus the reality. Because on the surface, this looks like a tech merger. Under the hood, it looks like a rescue mission disguised as an evolution.
Okay, hold on. Let's talk narrative first, then we get to the rescue mission.
Yeah.
Because Musk released a statement that sounded less like a CEO and more like, I don't know, a sci-fi author.
It is that.
He said this merger is about scaling to create a sentient son, to understand the universe, and I love this part, extend the light of consciousness to the stars.
It's poetic, certainly. And it ties into his long-term thesis of putting AI data centers in space.
Right.
The logic being that on Earth, we're running into hard physics constraints. The energy grid can't handle the compute power we need for AGI, artificial general intelligence.
We are literally running out of electricity to power these massive GPU clusters.
Exactly. So why not put the servers in orbit where the solar energy is effectively unlimited?
So the sentient son isn't just a metaphor. He literally wants a sun-powered brain orbiting the Earth.
That's the idea. It sounds incredible, but, and there's always a but with these mega mergers. You think there's a more grounded, perhaps more desperate financial reason for this, don't you?
I do. Well, looking at the CNBC report, specifically some of the analysis in there, there is a very practical why behind this. xAI is expensive. Extremely expensive.
How expensive are we talking? Give me the burn rate.
The reports say xAI burned through about $9.5 billion
Wow.
in just the first 9 months of 2025.
$9.5 billion in cash burn in under a year. That's hard to sustain, even for the richest man in the world.
Exactly. To compete with Google, OpenAI, and Anthropic, xAI needs cash. Massive amounts of it. They are in an arms race for compute.
Okay, so look at SpaceX. SpaceX is a different beast entirely. It's preparing for a massive IPO. It has reliable government contracts.
And Starlink revenue, which is effectively a cash printing machine at this point.
Right. So by folding xAI into SpaceX,
Musk capitalizes on what analysts are calling an insatiable appetite for AI stocks. He uses the excitement around the SpaceX IPO to fund the massive infrastructure costs of xAI.
so it's a way to secure funding without having to constantly go back to private markets for xAI alone, which I imagine is getting harder given that burn rate.
That makes a lot of sense. It's bundling the dream of Mars with the dream of superintelligence. You buy the rocket, you get the brain for free.
But let me play devil's advocate here. If I'm a SpaceX investor, do I want that liability? I mean, I bought a rocket company, and now I'm subsidizing a chatbot war.
That is absolutely the risk. But Musk's argument is that they aren't separate anymore. If you want to go to Mars, you need AI to manage the logistics.
And if you want AI to grow, you need space for the energy.
Exactly. He's betting that the vertical integration owning the launch, the power, and the intelligence is the only way to win.
And speaking of winning, it's not all smooth sailing in the AI world right now, is it? I saw something in the notes about NVIDIA. This merger seems to be happening right as the whole alliance model is cracking.
Right. This connects to the broader AI hardware war. While Musk is consolidating, NVIDIA shares were actually down 2.9%. The reporting indicates that their planned $100 billion investment in OpenAI has stalled.
Stalled? I thought they were inseparable. The chip maker and the model maker?
Apparently not. OpenAI is dissatisfied with the chips or the pace of hardware development, and they're looking at alternatives.
Wow.
So look at the board. You have Musk building his own ecosystem inside SpaceX to avoid these kinds of dependencies. You have OpenAI and NVIDIA showing cracks in their alliance. It just shows how high the stakes are for the physical infrastructure of AI.
It's not just code anymore. It's about who owns the silicon and the power.
It's like Game of Thrones, but with server racks.
Chuckles. Precisely. And speaking of which, Reuters has an explainer out noting that this merger isn't a done deal in the eyes of the government.
Right, the regulatory scrutiny. When you combine a major defense contractor like SpaceX, which launches spy satellites, with a leading AI firm, the regulators are going to have some questions.
I can imagine. Who owns the sentient sun? It's probably not a question the SEC thought they'd be asking this year. But beyond the SEC, does this trigger antitrust?
It might. You are combining the dominant launch provider with a top-tier AI lab. If they prioritize xAI payloads over competitors or use Starlink data exclusively for xAI training, that looks a lot like a monopoly.
That is going to be the battleground to watch. But let's bring it back down to earth, or specifically to the other side of the globe, segment 2, the U.S.-India trade deal.
This feels like one of those stories where the headline is a handshake, but the reality is a wrestling match.
It's a classic example of why we read the fine print.
So the headline news from CNBC and Yahoo Finance is that the U.S. and India have announced a new trade framework. On the surface, it looks great. U.S. tariffs on Indian goods are being slashed from 25% down to 18%.
That's a significant cut. For Indian exporters, that is a massive relief valve.
Huge. And President Trump took to Truth Social to claim a massive victory. He posted that India has pledged to buy $500 billion in U.S. energy and tech.
But the big claim, the one that really caught my eye, was that India agreed to stop buying Russian oil.
And here's where it gets fascinating. We have to look at the discrepancy. Because in diplomacy, what isn't confirmed is usually the sticking point.
The devil in the details, as CNBC headlined it.
Exactly. We have Trump's statement on one side, very absolute, very victorious. Then we have Prime Minister Modi's statement on X, formerly Twitter. Modi confirmed the tariff cut to 18%. He called it a step toward restoring stability.
But what did he not say? I'm guessing he didn't mention the oil.
Complete radio silence on Russian oil. Not a word.
That feels highly significant. India has been keeping its inflation down specifically by buying cheap Russian crude while the rest of the world sanctioned it.
It is deeply significant. It's kept their energy costs low and arguably kept the Russian economy afloat. For Modi to agree to stop that would be a massive geopolitical pivot. It would anger Moscow and likely raise gas prices in India.
So the fact that he hasn't confirmed it publicly suggests that there might be a gap between what was requested by Washington and what was actually signed.
Or maybe they're just reading from different scripts for their domestic audiences. Trump tells his base, I stopped the Russian oil flow, and Modi tells his base, I got our tariffs lowered.
That is very likely. Ambiguity by design. Trump needs to show he's tough on trade and isolating rivals. Modi needs to show he's getting tariff relief without appearing to bow to U.S. pressure.
So is this deal a nothing burger, or is it actually a big deal?
No, I think it's still a big deal, even if the oil part is murky. Analysts like Arpit Chaturvedi from Teneo argue that this carries more strategic weight than the recent EU-India deal. It's a reset of relations.
Right, trust between New Delhi and Washington has been a bit shaky lately. I think Mark Linscott from the Atlantic Council called it a confidence-building measure.
Exactly. It's about repairing trust that was squandered. The U.S. needs India as a counterweight in Asia. India needs the U.S. market. They are finding a way to coexist.
But there are legal hurdles here, too.
I was going to ask about that. $500 billion in purchases. Can a U.S. president actually promise that?
That is the other wrinkle. The CNBC report notes lingering questions about authority. The U.S. government doesn't usually buy consumer tech or energy directly, private companies do. So unless this is military spending, promising that much in purchases is legally creative.
It needs Congress.
It needs Congress. So we have a headline deal. But the mechanics and the Russian oil component are still very much in the wait-and-see category.
It's a handshake, but we haven't seen the contract ink dry yet.
Precisely. Okay, let's move to something that is definitely moving, and fast. The markets. Segment 3. Because if geopolitics is 4D chess, the markets this week are just pure chaos.
The psychology in the markets right now is wild. It's so emotional.
It really is. And we are seeing the return of diamond hands. I thought we left that term back in 2021.
Chuckles, I saw that. It never truly goes away. It just hibernates.
So looking at Bloomberg and CNBC reports on gold and silver, we had this historic sell-off on Friday and Monday. Silver was down 30% at one point.
A complete crash. And gold, which is supposed to be the safe haven, tanked right alongside it.
It was a classic liquidity event.
Okay, for the listener who isn't a day trader, let's break that down. Why do people sell gold when things get scary? Isn't that when you're supposed to buy it?
You'd think so. But when the market panics, or when big funds get a margin call, the bank calls and says, put up more cash to cover your losses, or we sell your positions.
And if you don't have cash, you sell whatever you can sell the fastest.
Exactly. Gold and silver are very liquid. You can sell them instantly. So people weren't selling gold because they hated gold. They were selling it because they needed cash to pay their debts.
Got it. So they were selling the family silver to pay their rent.
That's the perfect analogy. But then Tuesday comes around, the margin calls are met, the panic subsides, and boom, gold is up 6%, silver is up 9 to 12%.
And the retail traders are back. We have quotes from Reddit users like Jestax literally shouting, diamond hands regarding silver.
It really highlights how these commodities are behaving less like boring safe havens, which is what gold is supposed to be, and more like meme stocks.
Like GameStop. All over again. It's volatility driven by sentiment and internet narratives.
But there's a voice of reason trying to cut through the noise here. Let me guess. Jim Cramer.
The one and only. He's calling investors prisoners of pessimism.
I love that phrase, prisoners of pessimism. What does he mean by that?
He's addressing the broader economic fear. The market panicked recently because oil and gas prices dropped. Historically, dropping oil often means the economy is slowing down.
Right, demand is drying up. So investors saw cheap gas and thought recession.
Exactly. But Cramer is saying that's the wrong read. He argues that the drop in oil and gas prices, which we've seen due to warm weather and cooling tensions with Iran, is actually good for the consumer. It's a tax cut.
It puts money in people's pockets.
He's saying don't let the scary headlines about a recession spook you out of the market when the consumer is actually getting a break. Don't invent a recession just because gas is cheap.
And if you need proof that the market has bright spots based on fundamentals, we have to talk about Palantir. This is the counter-narrative to the XAI cash burn.
The standout of the week, for sure.
While XAI is burning cash and SpaceX is dreaming of suns, Palantir just dropped their Q4 results. And the numbers are undeniable. Revenue grew 70% to $1.41 billion.
That is massive growth for a company of that size.
And get this, U.S. commercial revenue exploded by 137%.
That is the key metric. We need to underscore that. For a long time, Palantir was seen strictly as a government contractor. Oh, they do stuff for the CIA or the Army.
Spooky classified stuff.
Right. But 137% growth in commercial means private businesses, banks, manufacturers, retailers are buying this software.
Why is that happening now?
Because companies are realizing that chatting with AI is fun, but using AI to optimize a supply chain is profitable. Palantir's boot camps, where they go in and set up their system in a few days, are converting customers incredibly fast. They are bridging the gap between AI hype and AI utility.
CEO Alex Karp didn't hold back either. He called it indisputably the best results in tech in the last decade.
He's known for being bold and usually wearing tracksuits while he says it, but he might be right this time. The takeaway for you listening is the contrast. You have speculative AI plays that need massive capital injections just to keep the lights on, like xAI.
And then you have Palantir, where adoption is happening now, cash is flowing now.
It's the difference between buying the promise of AI and buying the application of AI. One is a dream, the other is a balance sheet.
Perfectly put. Before we wrap up, just a quick check on the chip world, because we mentioned NVIDIA stumbling earlier. It looks like a mixed bag elsewhere.
It is. Intel is actually up about 3%. They announced a partnership with SoftBank's Simmery. Seems the legacy chipmaker is finding some new friends to stay relevant.
But NXP Semiconductors isn't having as much fun.
No, down about 5 or 6%. Weak automotive demand. It's stabilizing, but it's slow. It just shows that while AI is booming, the traditional parts of the economy, like cars, are still working through some issues.
So what does this all mean? Let's try to synthesize this for everyone. We've covered a lot of ground.
If we connect the dots, look at the theme. Elon Musk is consolidating a $1 trillion empire to put data centers in space. The US and India are negotiating massive trade deals to rewire global supply chains.
Retail traders are fighting massive volatility in silver. It feels like the stakes have just gone up across the board.
They have. It's all about massive capital flows chasing the next paradigm. Whether it's government tariffs, sovereign wealth funds, or retail diamond hands, money is moving aggressively to position itself for the next era. The AI era, the space era, the post-globalization era.
And it's moving fast.
Faster than regulators and sometimes faster than logic.
Which leads me to a thought I've been mulling over since we started talking about the sentient sun and putting servers in orbit.
Let's hear it.
If Musk actually pulls this off, if he moves the data centers to space to escape energy limits on Earth, who owns the jurisdiction of that data?
That is the trillion-dollar question.
Think about it. Is it the U.S. because SpaceX is an American company? Is it international waters laws? Or does the company that launches it basically become its own sovereign state in orbit?
If the brain is floating over the Atlantic, can the FBI subpoena it?
It challenges the very definition of sovereignty. If your intelligence lives in orbit, beyond any nation's border, who can tax it? Who can regulate it?
We rely on geography for law. When you remove geography, you might be removing the law itself.
Something to think about while you look up at the stars tonight.
Indeed.
Well, that's all we have for today's deep dive. We'll see you all tomorrow morning with new headlines from major financial magazines.